Hello, everybody. My name is Nicole and I'm a technical analyst and private investor. And today I thought, with this background of pandemic and this flap about inflation and whether it's a transitory or dreadful, whichever way you want to look at it, I thought I'd look at precious metals, actually. What's also prompted me was that President Macron at G7 last week suggested that G7 countries should sell their gold reserves and transfer it into IMF special drawing rights for Africa. Well, that's a different, idea on colonialism, really, isn't it? Anyway, but let's not get bogged down with all of that. Let's see what the charts are actually doing. So here we're going to start off with gold today. It's a weekly chart. It's really simple. I've done very little to this. And I think sometimes when charts are really simple, that's when you can really see the sort of standout features of them. And you can see that from an high, not the all-time high, but from an interim high in July 2020, we were sort of trundling down in a trend channel. And we broke above that in May. We broke above it. We then found all sorts of different Fibonacci retracement levels and whatnot between 1,800 and $1,920. And this week we appear to have sort of given up the ghost, i.e. it looks as if the upside breakout to the channel has failed and we are going to go back inside the channel. It's not the end of the world. I mean, this is nothing, headline grabbing, but what is important is, look, the red line is the 50-day moving average and the blue line is the 200-day moving average. And as of this week, it looked as if we possibly might get some sort of golden cross. Well, obviously, recent price action means it's not happening. And so I think gold, which has not performed well this year, will sort of go back down into the middle of the channel, something like that. So not terribly exciting, but let's just deal with it. That's what we've got to deal with. There are an awful lot of markets that are not exciting at the moment. So you just got to plod on. So let's plod on to my second chart, which is spot silver. Notice that my charts are priced in US dollars. If you price them in Japanese yen or in Indian rupees or Indonesian rupiahs, they would look quite different. And so other people around the world will see these charts very differently to what I'm showing you here, which is the sort of bog standard conventional way. And again, it's a weekly chart, and you can see that this one has been struggling at the $28 per ounce for a year. It's a year. And if you sort of squint your eyes and look more broadly, you could say that recent price action is the third attempt, and it looks as if we've failed. We're just trading below the 50-day moving average. And my third chart is platinum. This is slightly different, slightly more interesting, I'd say. But it actually has rallied. It's up 4% this year and up almost double since March 2020. We're now below the 50-day moving average, barreling down towards trendline support and the 200-day moving average. What I'm going to suggest is that precious metals may be yet another asset class that is worth avoiding in the second half of this year. Good luck.